What's up, traders? Welcome to the Day Trading Show. My name is Austin Silver. I am your host, and I really appreciate you being here. Before we get into the conversation with Richard Thomason and my co-host, James Bruce, I want to let you know that today's episode is sponsored by Surge Trader. You're going to hear more about that in a second. Today's conversation talks not just about Richard's trading experience and his trading history, but we talk a lot about psychology. We'll talk about how he used his chemical engineering degree as one of the degrees he has to enhance his trading performance. We're going to talk about trading from just a lot of different angles that you might not have heard of before. So make sure you're focused. Take notes if you need, and you can connect with Richard. His Twitter is linked down below. We really appreciate you guys being here as listeners. Make sure you subscribe so you don't miss any of our future episodes. Now enjoy the conversation with Richard Thomason. All right, everybody, we are back with another episode. We appreciate you listening in. Today, we sit down with Richard Thomason and our special guest, of course, Mr. James Bruce. So we have a South African versus American podcast today. I'm outnumbered for the first time, I think, on the show here, right, Richard? Because you're in Cape Town. James, where are you now, James? You're coming in from a different location today.
Yeah, I'm currently in St. Francis Bay. I'm coming from St. Francis Bay at the moment.
Nice. And Richard, it's good to speak with you. I appreciate you coming on.
Thanks for having me. I really appreciate the shout outs, and it's an honor to be here.
Awesome. So, Richard, I think for sake of the audience, some people might not be familiar with you and your story as much as James and myself know you through the internet. Could you kind of catch everybody up a little bit, just maybe where you found trading, how long you've been trading, and kind of what do you do for your trading strategy? What does that look like on a big picture?
Sure. So I've sort of been interested in markets since my late 20s, which is, sort of 20 years ago. I got interested. I was at a business opportunities expo, and I was looking for something to sort of make money on the side while I was starting out my career at a company called Unilever. And they were selling a course, and there was a raffle to win the course. I put my name down, my email address, and I didn't win the course, but the consultant rang me up on Monday and tried to sell me the course. And it was one of these sort of manuals that you learned, and there was, I think, a CD at the time, and installed some software. And if you just followed this stochastic when it was at the bottom and sold it at the top, then you would, make 100% in the year and no problem. So that's what kind of really got me going. And I thought, well, if I just study these things and I'm a pretty diligent guy, then I'm off to the races, So that's how I got started. So I've been trading the South African, the Johannesburg Stock Exchange since 2003, which is, almost 20 years now. And then the US markets, I did a little bit of time in Chicago, about 3 months in 2011. So that's when I sort of started out in an account, put some USD over there. And I've been trading that ever since. I've moved brokerage once, and just kind of things have evolved and got better, and brokerage has got cheaper, and so that's kind of me in a nutshell.
I love that.
The type of trader that I am. I'm not a day trader, as I mentioned to you. I'm an end of day trader. I will keep an eye on the markets in the day during my my full-time employee at a small company. I did work in large corporate for about 20 years, and the last 18 months I've been in a smaller type operation. So I'm a trend-based trader, discretionary, and I'll really just monitor the market throughout the day, but I won't act on anything unless sort of signals are given to me, sort of a close of day bar.
No, I love that. That's very good information. First question for you. Can you take us back, since you have so many years of experience? I have a lot of questions about technology and how it's changed. But first, just to understand you a little bit more, I like to ask some of the guests this question. Take us back to 16, 17-year-old Richard. Was he interested in finance? Was he was he entrepreneurial? What were you like then? I'm curious.
Wow. I mean, in high school, I would say I was probably heading down toward a sort of accounting, chartered accountant stream, and that was kind of my favorite subject. But in my final year of high school, I got really bored with that. I thought it was just too much, debit, credit, and I had a little bit of an eye on the markets that time. I'm certainly not an entrepreneur. I'd say I fit the mold of a corporate, cookie cutter person to the T. And only of late, I've really started to break away from that. But I've always fancied kind of breaking out and being the master of my own destiny. So that's a kind of later in life that kind of, instead of going down the road that's traveled by most people, what appealed to me about trading is, the normal cliche thing being about being your own boss, trading from anywhere, like James on the golf course now at the moment, and not having to answer to anyone, keeping your own hours and things like that.
We all can definitely relate to that. So it's interesting, and that spawned a bunch of questions for me. As a part-time trader, someone who has another job and is looking to still grow their, trading account, and you've been able to do that year over year now, I think a lot of people are looking for that same type of path where they're not necessarily like looking to just quit and leave their job. They just want to add to their income. And I mean, look at the macroeconomic situation we're living in with inflation and everything getting more expensive by the day. Literally, before I finish this sentence, people need more money. So what would you say, before we do a little bit more on you, what would you say to like a trader who's thinking about or trying to get started in markets as a part-time trader? What kind of advice would you give to that? I'm curious.
So look, I mean, I wouldn't say throw in the towel with your job straight away. You need to start. I didn't paper trade for a long time. I'd say there's a time and a place for that. Maybe starting out, getting used to your systems. But everyone starts on a small account unless you've kind of been born with a silver spoon in your mouth, and that's not play on your surname.
That's
Austin,
good. That's good. I didn't even
realize that now.
That didn't even hit me at first. That was good.
Yeah. But I mean, I think the guys that will succeed are people that really have a passion. I think passion is number one. You really got to be interested in this, and it goes for anything in life and career. You've got to be really interested in markets, and I think passion will drive you through the good and the bad times. And then it's around handling the tough times as well. So no strategy will really work all the time. Trend following goes through ups and downs. So does scalping, mean reversion, whatever strategy you employ, and maybe you want to blend a couple of those. But I'd say be open-minded, and go in with a growth mindset. If you fail at first, think, what can I learn from it? And you might wipe out your accounts, but just keep trying, and eventually you'll kind of put some themes together, and it's just about growing that capital. And maybe at some stage you will be able to quit your job if that's what you want to do. And maybe you just want a good life with some extra income on the side to spend some more time with your kids. And that was kind of my approach. There were times in my career where I really just wanted to break out of corporate, and I really hated my job. Of late, I've felt less like that. I've actually found some more meaningful work now, but I'm still passionate about markets, and I really love doing that. Yeah.
Well said.
I don't know if that answered your question. Yeah.
Yes, it did. No, it did, because, well, you've said it first, how important passion is. And I love that you said that, because I've said that to a lot of people, because as I've been trading for 8 years now, not as long as you, but people who used to, I have some people in my life, like even my dad, I think about, who used to think like trading is impossible, I can't learn it. Now they've seen my success and they're like, well, maybe I can learn it. And the first thing I tell them always is, if you're not passionate about trading, you're not going to be able to make it work. It's just not going to get to the fullest extent. Could you make some short-term good investing decisions? Sure. But if you're not really passionate about it, it won't fill the bucket, which ties into what you said at the end there, Richard, of now you're finding some of the new work you're doing, you're finding fulfillment in, which you're really enjoying. And that's what we are. We're like, for human beings, we're just about finding what fulfills us. And everybody, it is different. But I think if you want trading, if you think it is that for you, for our listeners, you have to be passionate about it, or it will not fulfill you. It will actually just drive you crazy and probably give you gray hair. And then you end up with no hair and you look like James. You know what I'm saying? But really quick, Richard, I do want to backtrack for a second. Now, and just tell a little story. You mentioned the chartered accounting, the credits and the debits as being an area of like something where you just kind of got hung up. My story with that, I don't know if you've ever heard me talk about this, but I was in university and I've been selling forever. Like, I tried to sell my mom's jewelry at a yard sale when I was like 13. I will sell anything. I always had a little business in the neighborhood doing shit, always. But when I got to college, at the time, I was still DJing on the weekends, doing my bar mitzvahs and weddings on the weekends, and I'm making money. And I'm seeing how a business actually runs. Like, I'm inside the company. I know the owner. Like, I see payroll. I see what's going on. And then I get to accounting, which is a course that I have to pass in order to then be able to take like Finance 101 and all the cool business classes in university. I take accounting the first time. I I'm the kind of guy that if I don't love it, if I'm not passionate about it, I'm just going to kind of skate by. Like I had like, I think a 2.9 GPA in high school. I was just average because I didn't like it. I was like, why do I need to know this stuff? But the things I like learning about, I have no problem learning. I love learning. So I take accounting and I can't pass. I realize like 3, 4, 5 weeks in, something like that I'm like, I'm not going to pass this class. It's going to hurt my GPA. And at the time now in college, because I started to take classes I liked, I had made Dean's List. Like I was doing well. So I was like, let me drop this. I don't want to hurt my GPA. I'll pick it back up. Well, I go to pick it back up the next semester and I do it online. Well, that goes even worse because it still just didn't click with me. Like the accounting credits, it didn't make sense. And in my head, I kept saying to my advisors, to my teachers, I was like, if I'm going to run a business, do you really think everyone that runs a business does every role in that business? Like, wouldn't I just hire the kid that is in this class with me that's just doing better? And of course, they had no good answer to that. And that was part of the reason why I left school and dropped out of university completely, because then I had to shift over to communications as a major. And communications is not an area that I struggle in. They're teaching me communication theory and all this other stuff. I'm just like, this is not going to help me. So that's when trading did pick up and I left school. But it's funny that we both kind of come from the same background of like trying that chartered accountant thing, seeing if it works, trying to go into the traditional business route, and it just didn't fit for either of us. So is that something that you would say, just a side question, like throughout your life, would you say you've taken a more unconventional path, or do you think for the most part you've tried to follow what success has already told you works before?
No, I'd say I followed a more conventional path. So I've studied a few degrees, and to be honest, my undergraduate degree, I think I mentioned it to you when we were kind of getting to know each other. One of my characteristics, and trading teaches you a lot about yourself, as you know. You have to learn about yourself intimately. I'm quite a stubborn guy, and when I put my mind to something, I'll kind of pursue it until it's complete. So I studied chemical engineering, and I knew quite early on that this wasn't quite me, but I was going to prove that I could do it and see it through to the end. So whilst trading requires you to be quite structured in your approach, you also have to be fluid and move off that. And in my running as well, I'll follow traditional training techniques, use the same shoes, whereas my friends have moved on to these graphite things that bounce better, and they've moved away from Good to Morton, which is now what Ilya Kipchoge is using. But if I've done something that's worked for me, I'll stick with that method. So I can have the blinkers on, and I'll just and that's kind of can be a downfall in trading as well. If you're not flexible, and you need to be very confident going to trade, but you also need to kind of make your mind up quickly if you're wrong, and be cool with that. So I'd say that I've followed a conventional path, and yeah, I think probably one of the things that I've struggled with is being confident. Confidence is probably one of my areas that, and maybe that's me trying to prove myself in life the whole time. So, yeah, that's kind of where I'm coming from.
Yeah. And I think the engineering background, now you got me thinking that's interesting too, because I feel like traditionally engineers are meticulous, they're very detailed, and those are characteristics that translate well into trading when you're documenting, journaling, studying data. I mean, because I know, like, again, from seeing your stuff online, like a lot of the decisions probably tell me if I'm wrong, but a lot of the decisions you made in your trading are probably based on data and some type of study of actual numbers and math. So do you think that a lot of the skills you learned in studying to be a chemical engineer translated into trading? Were they skills you already had before then? I'm curious.
I think it kind of amplified them. I was always interested in charts, and engineers love charts. So I love charting. I love technical analysis, support and resistance, that sort of stuff speaks to me, volume. So it taught me to be very analytical, and it really honed that skill, and methodical problem-solving approach. Whereas the market, it's not something that can be kind of solved, right? You're always you don't know whether you'll be wrong. Like if you go into a casino and you bet, immediately the outcome. Whereas in trading, there's always that hope or the fear, or if you just stay in the trade, so there's not a definitive outcome type of thing the whole time. Yeah, so I'd say it kind of honed those skills, and of late, what's got me really interested in what would have helped me more, from an undergraduate perspective, is studying psychology. So in the COVID pandemic and of the last few years, I got extremely interested in crowd psychology. And Twitter can be a real good sentiment gauge. Yeah, I was just looking. I found Twitter fascinating. You went from 2 years ago, people screenshotting their profits on a daily basis and saying how fantastic they were, to not really seeing so much of that in the last year. And these people have just kind of disappeared. People didn't sell that made a lot of money on paper that just didn't sell and got carried out and just don't trade. Some of the accounts are not active anymore. And it's been fascinating to watch how, when interest rates have gone up now, how people have how the wheel has turned, certainly in equities. Yeah. I don't know, from
it's almost like
churned.
It's almost like churned those people out of the market as the wheel grinds forward and the interest rates have grinded higher. It's taken a lot of the amateur participants out of the market. The people that just put money in Robinhood and hit buy, and then 3 days later they're up 1,500% or something like that.
Yeah, and there was a great video someone made of the sort of sequence that Davey Day Trader was his name.
Yeah, I'm
sure you guys saw that. Where,
of course,
it was like, buy anything today, and then a few months down the line or a year down the line, it was like, I'm giving up. This is just terrible. Yeah, I can't make money anymore. And he's back to his, what he's doing, Barstool, selling pizzas or something. I'm not sure. It was just a fantastic journey to watch that. Yeah.
It was, and he felt like he was like leading the retail trader army, and then it's typical. There's cycles. Like, you've been around for many years. You've seen there are many cycles to markets. There's big cycles and small cycles. That's something Ray Dalio talks about a lot. I'm curious, speaking of cycling, another sport, you mentioned running. Are you into sports? Is running your main thing? What other athletics are you into?
Yeah, so I've tried a lot of things growing up. I did normal sports at school, cricket, rugby, and then in university I did a bit of scuba diving and river canoeing. But in the last sort of since '97, so that's what that over 25 years I've been doing long distance road running and trail running. And taken part in the Comrades Marathon, which James will be familiar with. It's like a 50-mile race from Pietermaritzburg to Durban, which is happening in about 2 weeks. And I'm doing actually a 100-mile trail run in Lake Tahoe, and on the 24th of June, actually, I'm coming over there to try that, which is the oldest 100-mile trail run in the world.
So you must be a Cameron Hanes fan, right?
Cameron Hanes, I haven't heard of him. Yeah.
Oh, really? All right. So here's a good one for you. His new book is Endure. He's one of these guys that runs the 100-mile things. He has a story in there where he talks about running next to Lance Armstrong in one of the triathlons, like crazy long distance runner. It's called Endure. I'm pretty sure it's awesome. It's a great book.
Check it out. Thanks. Yeah.
And oh, absolutely. And like, I feel like when you said trading, like studying more psychology is what you've been on now, I feel like that's something all traders come to at some point. They realize I don't need to learn more about a chart. There's any multitude of indicators. Of course, we can do research and learn about the indicator. It's been taught for many years, but all of what trading comes down to, especially once you have a strategy with data that has said that strategy works, it's all psychology. What's the difference? Like, we could be in the same trade, Richard. We're both short the dollar, but if we have different psychology, different experience, I can pull it for a loss and you can make 10%. It's all psychology,
Great. I love the, there was a chap, I think a day trader, Andrew Aziz, who just scaled Everest, and Stephen Goldstein came on there and said, congratulations, Andrew. The obstacle's not the mountain, it's yourself, right? So, exactly. You could be short, and something I don't struggle to do is hold on to winners. So this book I'm reading now by Tom Hokart, he's talking about most people struggle to hold on to winners, and they'll quickly take, there's a lot of different ways of trading. If you are looking for a quick win, or I know you guys have a different way of trading, but I've never struggled to hold on to a winner. Whereas they say a lot of people will get onto a winner and they'll want to quickly take their profit and grab it. Whereas if I'm on a loser, I would want to get out of that quite quickly. Whereas they say a lot of people want to let that run and maybe add to it even, which is worse.
Move the stop loss or add. Are you a robot, Richard? Like, why are you able to do the opposite so naturally?
No, I've been through I've been through all the mistakes. Don't worry.
Of course. No. Well, I'm very familiar with Andrew Aziz. James and I are connected with him through Twitter, and I know that he's been doing that climb of Everest. And I love reading the stories where he's like, I saw this guy on the mountain, like he said when he summited, it was like this guy died like yesterday right there, and he saw it, and he was like telling
19-year-old guy.
Yes.
He kind of like high-fived him the day before when he was passing.
Oh God, dude. That gives me anxiety, like reading that story. Crazy. And like you said, the obstacle is not the mountain. The obstacle is inside here. It's because it's clearly doable. And that's the same thing like Roger Bannister, right? Like no one was going to do a 4-minute mile. And then what happened? One guy did it. And then like 10 people did it in the next month or the next year. Like it was crazy, right? It's just breaking through those barriers. James, did you have something you wanted to chime in on that?
Yeah, I hope I'm coming through all good here. Richard understands the South African struggle with the internet.
No, you're good.
Yeah, I just wanted to ask Richard. By the way, Austin, Richard and I, South Africans, we smart guys. We both got degrees. You Americans, you quit too easy. But I just wanted to ask. So Richard is more of you come across. I know I've been following you for quite some time now, and we've been connected on Twitter for a while. You come across more as like a positional trader. How are you getting into your trades on the equities? How long are you typically holding for? And what are your buy and sell signals? So if you're looking to buy a stock, I know the other day you mentioned that you don't sell shares, you don't sell stocks, you don't short stocks. So what is your buy signals, and when do you know when to get out?
Okay. So I mean, I don't have typical scans that are run to say, the volume's up 50% or whatever. So on the local market, it's a lot easier because you've got a universe with a big account, or biggish account, should I say, bigger account. You kind of shrink your universe to 40 or maybe 100 stocks on the local exchange. So I'll kind of focus on those. What I'm looking for is something that's starting to trend. So I'm happy to miss the bottom or the top of the trend. And like you said, I'm long only equity, James, so I won't go short. I would say there's room for me to maybe incorporate that, because there's a lot of stocks that I see are clearly in a downtrend, and I call a target on them and they go to that quite often. But what I'm really scared of, and particularly in the US markets, is something like, NVIDIA, for example, last night, where it was widely seen as overvalued, and people that were short got carried out. It sort of went up 25% after hours on good earnings and guidance.
Insane rip.
So what I'm looking at is things like, and it's not how I get in, moving averages, trending indicators. So is the trend going up? Is it breaking out of a resistance into sort of a channel? And then when I'm looking to go out of a thing is that trend starting to roll over. And I'll use a ratcheted stop loss to kind of ride that trend as long as it keeps me in. And that might be, I've been in trades for a day or two, and I've ridden trends for a couple of years actually. My average holding period, I would say, is about a year on the local markets. I haven't run my numbers, but the last time I looked was about a year. On the US markets, it's a lot shorter. And I think it's because it's just so brutal. There's a miss and you kind of out quite a lot quicker than in the local market, which I actually find a lot easier. Yeah.
Hey, real quick, Richard, can you educate somebody like me? Like what is the main difference between the Johannesburg exchange and the US markets? Is it that different, or is it very similar? Because the US markets, I'm sure, probably have a lot more stocks to trade. Am I right to think that?
Yeah, they do. So the universe is massive. I mean, you've got the Dow, you've got the S&P, and you've got the NASDAQ, and they're all very different. Sometimes act very differently. In fact, this year, the S&P and the Dow is kind of flat, and the NASDAQ is trending again.
Yep.
With things like Apple, Microsoft, NVIDIA, things like that are really, really taking off again this year. So they have quarterly earnings, first of all. So holding through earnings, you can see these big rips onto the up or downside. You don't typically see something like that happen in the local market here. So here they'll report every 6 months by kind of they're forced to report 6 monthly, so an interim and a final. And it's a lot gentler. And the guidance is not, the expectation is not like 1,000 analysts expecting this number, and if they miss it by 1 cent, it'll drop 20% overnight or after hours. It's a lot gentler. And if something really comes off the rails, there was a stock called Transaction Capital now, which really unraveled. It was a geared sort of interest rate play. The price starts talking to you and you kind of know before the time. I'd say the market's a lot less efficient here and a lot less people covering it as in the US. And
when you say less efficient, does that make it Yeah, does that make it more manipulated?
Yes, for sure. I mean, there's often people calling out here that news is leaked before a stock exchange news service announcement has come out. Um, insider trading, what might be classified as insider trading, that's not investigated by the Johannesburg Stock Exchange sort of watchdog.
Yeah.
So
lesser regulation, less strict in that sense.
Correct. Yeah.
So do you find that playing between both is the way to be, rather than just go all in? Because I'm curious, like, why, because you've been trading for so long, you easily could have left South Africa and moved to America and just trade US markets because they're so much bigger. So why have you, I want to get to for the listeners, why both? Why are you dipping in both? Should listeners be looking to dip in both, in multiple markets like that?
The reason I have both is I think, the dollar is a whole lot more powerful than our local South African rand, particularly at the moment. So I was looking to sort of grow my account there, having a lot of dollars in the US, and if you convert it back, or if you need to go live there, to grow your account that side as well. So it's a bit of a diversification thing. So if you're living here, people, all they talk about is get rands offshore, buy dollars, and preserve your wealth like that, because it's just, in an emerging market, your currency just weakens over time. I haven't done as well in the US over time, and I think the reason I do better in the local market is just because I'm listening to analysts and commentators here the whole time, as well as I've got my ear to the ground. I'm seeing, okay, retailers are dropping. It's obvious, interest rates are going up, the consumer's under pressure. But if I go to the mall, I see there's nobody in the freaking shops, and there's no new cars driving around, and the lights are out and things like that. So it's pretty obvious, So having an ear to the ground, whereas there's just this massive universe of stocks, and I kind of have an idea that Home Depot might be doing well or whatever, but and that can also be a disadvantage, because you can kind of get married to your position because you have this fundamental background about a business, and you say, oh well, no, this doesn't make sense. So you're kind of arguing in your mind, I should hold on to the stock because the chart's not making sense. But I've largely overcome that. I'll look at the chart and I'll say that's the price is the pure play, and just follow price. So
yeah, 100%. That makes sense. Did you have something you wanted to get in on that, James?
Yeah. So I wanted to ask Richard. I know a couple of guys that trade the JSE, right? They're big prop traders. I don't know if you've heard of the prop firm. It's in Storm Capital, Storm Trading.
Storm Trading. I've actually visited the office in Constantia, the Constantia office here, James. Yeah.
Yep. Yeah. So I know a couple of guys that used to work at the firm in-house, but now since COVID hit and everything, they're working from home here in Durban, South Africa. So I was at a bra one night, a barbecue for the Americans, and we got chatting about the markets and so forth. And he was speaking about why they've actually also started to emerge into the American markets because of the low volume that is actually traded on the Johannesburg Stock Exchange. Is that maybe a reason why you did it? You also moved to the American market, as well as maybe why you didn't, when you first got into trading, look to day trade because of the low volume, low liquidity, compared to what you can look at the Forex market, and where there's just so many people trading it.
Yeah, I mean, it wasn't the reason that I went into the American market at all. I think when I was just in America in 2011, I was just curious about this whole new world of stocks, and my eyes were, I went to visit the Chicago Board of Trade, and I went to visit the open outcrop pits, and I had stars in my eyes. So I just opened an account with TD Ameritrade at the time, and started trading, and all these new household names that I'd heard of that I could now suddenly trade. But I have heard from those traders, and I do follow quite a few of them on Twitter. And as I say, I went to that house. I don't know if they still trade from the house. I know exactly the house that is opposite the Constantia Mall.
Yep.
I don't think they do anymore, because I think we had that guy Mark on here. And I think we had a guy on here. Sorry to cut you off, Richard. I don't think they're trading from that house anymore. But go ahead. Sorry.
Cool. Okay. Yeah. I know they had Mike Bella out there at one stage.
Yeah, they were trying. They were trying to do it right.
That was years ago, though. So.
Yeah.
So James, no, I think a lot of people have said that liquidity has dried up a lot in the market. I mean, really, you've got a few. American Tobacco has as a dual list, it hasn't really done that much. So there's a few mega caps driving the JSE and keeping it kind of flat to up. Other than that, volumes, I would say, have dried up a lot, and there've been a lot of delistings after COVID, and things bought out at good prices. Yeah.
Yeah. Can I ask, Richard,
So,
why are you long only?
Yeah, I mean, it's a good question. Like I said earlier, it's something I've always done. But if I were to short something, I could probably do it on the local market, because, as I said, the moves are not as vicious as in the American market. I'm just so nervous of, and also being short. You can only kind of make 100%. Whereas on my leverage, you can kind of, you can kind of make unlimited money on the long side. So what I'm looking to do is kind of make 10R on a trade or 20R on a trade. Whereas, I don't know, shorting's just never really kind of appealed to me. I've just
But it's smart to stay away from it then. It's a good decision. Was that something you always did, or did you try to short and you were like, I just don't like this?
No, I kind of was warned against it, and I just never have tried it. I mean, I've bought books on shorting, and that has just never kind of appealed to me. And it's nothing against, people say that people who short are kind of bad, and they want the economy to demise of the economy or the company. It's required for functioning of capital markets, but it's not something that's appealed to me and been part of my strategy. So.
Makes sense. So when you talk about strategy, to just get a little bit more detailed in that, are you looking for specific technical patterns that you might be able to describe to us, Richard, just to give the audience some context into exactly what you're looking for in these ideas?
So looking at charts for a lot of time, you kind of get a sense. And my charts are pretty clean. I'll just put volume, price, and maybe a moving average or two on. And I'm mainly looking at horizontal kind of pivot points or horizontal support and resistance. That's my main thing. And I know people like Peter Brandt will say that kind of technical analysis has got limited use these days, and horizontal lines are kind of the most useful things. So I kind of just draw a few of those on, and I'll watch for a breach of those. And where they work really well is obviously in momentum-driven growth markets, when you've got interest rates decreasing and expansionary monetary policy going on and things like that. So I'll just kind of take a look at a chart, say this thing's going up, and I'll this is the right time to get in, and I'll go ahead and go in. Knowing the companies quite intimately as well, you kind of know what works in different cycles. So you know what sort of universe to zoom in at this point of the cycle as well, and which ones to kind of stay away from, and which crowd favorites have kind of fallen out of favor. And that's kind of how I go about business. Yeah.
I love it. And it's interesting for us, as the audience here will have people that are day trading, people that are swing trading. It's very interesting to hear the perspective of like a long only trader, because recently we sat down with a guy, his name is David. He is known as the reverse long. He is the opposite of the long. All he does is short. So it's really interesting to hear your perspective. Yeah, exactly. And you mentioned Peter Brandt. Peter Brandt is the one who I credit for, of course, many things, but specifically the one for teaching me to stop. I never really liked drawing diagonal trend lines, wedges and stuff like that. I always liked break and retests of horizontal levels much more. I found wedges lead to fake outs very often. And when Peter tweeted once, like, stop drawing diagonal lines, trust horizontal levels, the break and a retest of a horizontal level is one of the best patterns you can trade, it just clicked. And then that was like it for me. So I'm curious, since we both have mentioned that we have taken influence from certain people, some of the same people, who would you credit for not teaching you how to trade, but like your methodology? You know how a lot of people will say, oh, I trade the William O'Neill strategy. I trade this way. I trade that way. Can you give an idea of that?
So, I mean, a breakthrough book for me was probably Koval's Trend Following. It's not one particular strategy that I mentioned that. And another guy I will credit with kind of knowledge that I use from his work is Nick Raj, the chartist.
Yeah, he doesn't get enough love. I know, I've seen his work before. He's good.
Yeah. Other people who've had an influence on my trading, Dr. David Paul, Trader Davey. And he's good friends with Tom Hokart, who you would have known through the Best Loser Wins book, which has come out now.
Yep.
And he's really a day trader. David is more position based trader. And then from a psychological perspective, I think Steve Ward, I took one of his courses. He's really good. I've got his work and I enjoyed his course, Trade at Your Best. Mandy Rafsanjani, who I did a kind of hour session with her, and would probably go to her as a coach. But yeah, I would say that the folk that Michael Covell talk about in his book are probably the people that I follow. The people that I respect a lot, I probably have the most respect for someone like Peter Brandt. I think the guy's, stayed in markets for 40 years. He respects markets so much. He's such a student of the market. He works diligently on the weekend. He has his factor group, which is a private Twitter stream that he tweets out to, and has these interactive calls every now and again. And he's come from the pits, and he's traded futures his whole life and commodities. I think the guy's really a living legend, market wizard. Yeah,
I agree. It's funny that you have so many different influences. And are any of those guys South African, or are they all outside of South Africa?
So David Paul lived in South Africa for a long time in Pretoria, which is just north of Johannesburg. He's relocated to London, I think, probably close to 10 years ago. And I think he ran a show with Tom Hogart called Which Way Today for a while. And they were trying to turn some money into £1 million over a certain amount of time. And I think they're still very close friends. He mentions them in his book, but they're no longer kind of associated in business, I don't think. But David has relocated. None of the other people are based in South Africa.
So that's interesting because it just shows the day and age that we're living in, about like how we all learn and how we can take mentorship and ideas from all over the world using the internet. So would you maybe just speak for a second on, like, over the years, how you've seen technology enhance or maybe hurt trading?
Sure. Yeah. I mean, back when I started, I remember phoning the broker to close a trade or open a trade. Sometimes I didn't have the know-how, or I might have thought that somebody's waiting on the other end to try and kind of trick me or scalp a few points out of my trade. I don't think anyone phones the broker anymore.
Not at all. Definitely not.
And yeah, I mean, internet was a lot more patchy those days. The brokerage hasn't come down much on sort of standard bank online share trading, but we have got a broker which I don't use, which is kind of taken trading to the masses, like a Robinhood, which is called Easy Equities. I don't use that. It kind of really captured a whole of retail traders, which have disappeared. Yeah, newbies, 100%. Yeah. I've moved on to TradeStation. I don't know if that's a good broker in your guys' lives. I'm not sure, but
no, it definitely is. I know a guy that worked there for 15 years.
Crudeli uses TradeStation. Yeah.
Oh wow. Okay.
Yeah. That's correct. Yep.
Okay.
Yeah. Okay, so that's interesting. So you've seen it kind of progress, but yet the brokerage, you said you've been with them for a long time. So that really hasn't seen a bunch of, but that's just interesting because, like, you're seeing, I'm sure, the funding companies and the prop firms everywhere. I know there's a lot of guys in South Africa that are talking about that, right? So that's a big area that I always think about, like, where technology has changed trading. So do you see a lot of younger guys and new traders in your area in South Africa trying to get funded? Is that the thing that's popular there as well? Because it's so popular here.
Yeah, I mean, I see James talking a lot about that and getting funded. I mean, I think it's quite brutal and quite tricky to kind of prove yourself in such a short period of time. I don't know much about it, but from what I understand is that the hurdle rate's quite high. You have to make a certain amount in a certain month, and then you can progress to more funding. And it's kind of like pruning the weeds, and only the best survive, right?
Absolutely. And it's tough. Yeah, I think those firms that put the time restraint on it makes it tough, for sure. There's some firms out there that do no time restraint, just have to return well. But it's interesting because, like, for a guy like you who has equity experience and is long only, I'd be curious to know, like, if you saw the spreads and the availability that these firms offer, would it interest you? Would it pique your interest enough to maybe get you over there to try to trade with them and leverage up some of their money? Have you thought about that at all?
I've never thought about it. You know, and it would be an interesting prospect because, you know, I mentioned to you as well before we started this interview that when I started to scale my account, the numbers that I was starting to, you know, when you had to kind of press the sell button, you knew how much of your money you're going to lose suddenly when there's a few more zeros on the end. You kind of pause a bit before crystallizing that loss, you know. So I had to work through a few of those issues. When it's not someone else, when it's not your money and it's someone else's money, I suppose it's a different prospect. But you know, I've always kind of wanted to eat my own kill and do everything myself.
100%.
And that's probably one of the reasons I haven't wanted to really run a fund, is that you have this whole responsibility of other people who would come knocking on your door if you're underperforming for a few months, you know.
Oh, not even
but
a few
I've
months.
never
If you
really considered
underperform
it.
for a week, they're going to call you and say, Richard, give me my money back.
Yeah, yeah.
Richard, I wanted to ask you a question. So I'm glad that Richard and I have connected on Twitter. You know, in the last year, and I always appreciate, you know, I love meeting guys like around your age and Crudeli and learning from guys like that, because it's always, you know, I can always find so much value and you know, life experience and learn a lot from you guys. Because you started trading on I see on I've read through, you know, I've read all your tweets. I actually have notifications for your tweets. So just so you know, when you tweet next time, just make sure you know you're tweeting.
Just so you know, you're talking to your biggest fan
yeah.
right here now, Richard.
Yeah. So I love your perspective on things. So I mean, you've been trading since 2003. So I was 5 years old at the time. So what advice would you give to someone my age, or even like a younger Richard in their 20s? What's some advice, life advice or trading advice that you would give to someone in their 20s?
Sure. So I think you've got the passion, James. That's the first thing. You know, you can see it shining through, and the way you tweet as well. You know, you say a lot of things which kind of resonate well, and I think you've got to have a healthy mindset. So you know you want to be in markets and where you want to go. I think you've got to have some kind of purpose, right? So as well. So you know, I thought about this a lot, and when I first started trading, and I think what attracts you to a lot of people to trading is, you know, the fast car or trading from the beach hut with a cocktail on the, you know, and not many people are like that. But you know, and if I can just relate a story or two, so you kind of get into it. And there was a chap called Tom Canfield who traded for 20 years, and then he lost, I think, $500,000 in an hour. He came on Stephen Goldstein's podcast, and he relayed the story, and it took him 18 months to get it back. And he came on, I think 3 years later. It still stirred up all those emotions, and you know, he almost had a breakdown after that. And after that experience, you know, he was just trying to, you know, get this condo in Aspen and all that stuff, and it kind of brought back what was real to him, and that was spending time with his kids, and he moved closer to them and scaled down his life a bit. So that got me thinking a lot. So at this part of your life, James, I mean, you've got a girlfriend, you like your golf, you work out, you're doing all the right things, you're journaling. So, you know, keep on with that. You know, but I think to yourself, what do you want out of trading long term? And hold that as kind of your, you know, in the back of your mind. What are you trying to get out of it? Is it a puzzle you're trying to solve? Because that's what kind of keeps me interested, and I don't think I'll ever let it go, because you can never really solve the market, you know. And then stick at it. You know, you're going to have periods of ups and downs, and take those lows and learn from them, and always kind of have a mastery mindset. So, you know, keep your workouts going, keep journaling, keep thinking, what's one thing that I can do better today to be a better trader than I was yesterday? And you'll never quite master it ever, I think, but you'll always, you know, keep honing your craft towards that sort of mastery mindset. Yeah. That would be my advice.
Appreciate that.
Yeah, I love that. That was very well said. I'm curious, if you don't mind, Richard, I'd like to bounce to a different question, because that was good for like the younger guys to hear. You've mentioned interest rates a couple of times, and I know I have listeners of the podcast that are very technical, and that's why I try to ask some of the questions about strategy and analysis specifically, like as I do. So when you mentioned interest rates, from your perspective now, trading both US and the Johannesburg Stock Exchange. How influential is the US Fed to you and interest rates here and the CPI here? How much of that do you pay attention to? And how, if you could, not how much do you pay attention to it also, but how do you use it in your trading? Because you're looking on longer time frames. So I'm curious, how far forward looking are you there?
So, I don't kind of listen to the Fed minutes, and kind of, there's people that hang on every word of what the guy's saying. I'm always aware of when announcements are getting made, and when, people always put the first thing they put out on Twitter is, interest rates were raised, or they're going to pause, or they're going to pivot. And I think it's just got worse and worse over the years because everybody's hanging on every single word, and analyzing these AI algorithms that are kind of looking at these sort of things. So I'm cognizant of it. What I'm more interested in is the reaction of the markets. I don't actually, I'll turn it over in my mind a bit, but what I want to know is how our home builders going to react to that. How's discretionary spend going to be affected? How's the consumer going to get squeezed? Because we'll typically follow here. Interest rates go up in the US, they're going to go up in South Africa as well. And they're raising them here to kind of defend the rand's demise, which is not really working at the moment. And it's squeezing the consumer a lot there and here. And this is all part of cycles of markets. We've had 10 years of excess and exuberance, and now rates are getting raised, and we've kind of got to go through those first few years of the presidential cycle, and then they're going to start easing again, and then we'll have a new president, and then things will be good again. And so I'm more interested in the reaction of the market than what the guy's actually going to say.
That makes sense. No, that makes total
sense. From a longer term perspective, I might miss out on a few ticks here and there, but I'll let the bars kind of do their thing. And at the end of the day, I'll reflect and kind of, what does this all mean, and where to from here.
Do you see us then 2024, 2025? I saw a chart today. The Fed is projected to have lower Fed funds rate. And that's, like you just said, a year after a new president is elected. Maybe we start to get more bullish there. Is that what you would be anticipating? Is that the time you'd see some acceleration in the cycle?
Yeah, I think the people were talking about cuts towards the end of this year. It might be a bit premature. Perhaps it's early next year, but certainly I don't think we're going to go into a 1929 kind of crash, which a lot of people are kind of saying. I think we're almost there. We've had record inflation. I think we're going to have record interest rates to kind of tame it for a while, but we've already turned the corner. Interest rates, inflation has started to turn down, and we're starting to see that coming through into everything now. So I think we're kind of almost there. And the markets will see through that, and they'll start to turn before we actually know it. Yeah,
of course. And you could argue that maybe we already have. Look at NASDAQ, like you mentioned already. If you look at it from the bottom, it's up 30% this year or something like that. We've been talking, James and I together have been saying, like, if we see extended bullish momentum, people will look back and say, oh, NASDAQ pulled us out of that bear market. Do you have a theory on why that is? Do you think NASDAQ is pulling us out because of the future with technology? Like, there's not really another sector that's going to pop up and take over. It's going to be these tech companies that just develop AI and the new generation. Like, technology is still going to be the next boom. Don't you agree? Like, how we had the dot-com bubble, you could even say was technology driven, right?
Yeah. I think the NASDAQ will always tend to kind of lead us up, and there'll always be a new basket of companies, a new set of leaders that, if you look at William O'Neill's Can Slim methodology, it talks about the new leaders and the new tech, the new guys that the current quarterly earnings are going up, and it's always the innovative industries that kind of lead us through. And I think it's always the mega caps that start that, so we're seeing that now, as I said, with Apple, with Microsoft, with NVIDIA. And then you'll see some other things come through, like companies like super microcomputers and things like that. For a while, it was biotech a few years ago. And,
I remember. Still occasionally a biotech will rip out of nowhere because of some press release that comes out. That was what put me off from trading stocks when I first got into it. I was like, I don't want to trade a market that gets so easily manipulated. So what pushed you away? Have you tried to trade Forex? Is the right way I should ask that. Have you ever been interested in that?
Yeah, I was waiting for that. So I actually started, I was really interested in it. I don't know what drew me to it, but I actually started with that, and I bought a black bottom, and attended a seminar at a hotel maybe 20 years ago when I first started out. And it's a company called Data Signal International. If you try to find them on the internet now, they don't exist.
Of course.
I can't remember what I paid for the course, but it was $1 amount, and you just had to kind of, and you installed charts. It was very fancy for in that day and age, but it would be, kind of a tenth of what sort of TradingView gives you these days. And they had signals which said go long and go short. They taught you, the guy phoned you from Canada for an hour on your cell phone, which was quite fancy at the time, and had this cool accent. And then you got these signals that came through your phone, and you could pay for the signal to come to your cell phone for $100 to tell you when to get in and get out. And that was kind of their tech at the time. So I followed this thing, and you couldn't really automate and set and forget things at the time. So I would kind of go to sleep, and then I'd wake up when my screen, when the Asian session was on, and my screen would be going blip, 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 and the pips would kind of be going faster and faster. I'd wake up, and then, eventually I was just a zombie after like 3 hours of sleep, and kind of my $1,000 account at the time was smashed in no time. And I was like, okay, no, this is too tricky, and I can't afford $100 for a signal, so it's not worth it.
No, that's a funny story.
On stocks.
And it just shows the signal scammers have been around for a lot longer than people realize. It's true, right?
Yeah, that is funny. That is actually pretty funny, because that's exactly what still happens today, except a lot more easy.
Yeah, access. Now it's join my Telegram group for $50 a month, and I'll call signals. Meanwhile, they could, in my head, I'm like, I'll just start that, and I'll just call random shit, and people will think it's like real. Like, who would believe that? It's crazy that people think they're going to get $50 and they're going to get winning signals to make money. It's just, it's mind blowing. No, that's funny, Richard. So it's funny that's what's pushed you to equity. So that's great. I was originally pushed to Forex for the low barrier to entry, and now I've come around. I haven't traded a Forex pair since November of last year. So I'm really just Bitcoin and SPX and NASDAQ. Like, that's where I'm really finding my stride right now. So James is still our Forex guy. Definitely still our Forex guy.
Cool. Massive market, yeah.
Massive market. But this has been really, really interesting, Richard, to hear your perspective on things. I think my audience is really going to like this, because you're different than some of the day traders that we've had on here, but you have a ton of experience, which shows in your answers. So here's my final question for you, if you don't mind. Can you share one of the biggest mistakes, biggest losses, biggest setbacks you've had in trading and how you overcame it?
Sure. Yeah. So, I mean, if we just go back to when I said I'd grown my account, so it was a few years ago when kind of COVID hit and everything had dived off a cliff. And I'm quite good at pulling my sells, and when it hits my stop loss. So I was carrying a lot of cash, but the size of the trades had ratcheted up quite a lot, and the number of zeros on the end was kind of frightening me a lot. So I let a trade just slip a couple of days past the where I should have exited. And a little bit of bad news compounded itself. And, you leave this thing one more day, and you think, okay, it'll come back. And the longer you leave it, it's just like a baptism of fire. The nausea just grows and grows day by day. So this loss just got bigger and bigger and bigger. Eventually I capitulated. I kind of lost, I don't know, it was 50% on the trade. Luckily I was sized accordingly in my account, but it was 30% more than I kind of wanted to lose. I did come back to that stock and make most of it back, and it's something you shouldn't really do in revenge trade with that stock. But that kind of point was a low point in my sort of trading career, if I could call it. And I had to work through a lot of stuff. I think that was the time I really took Steve's course and went into the whole mental aspect of things, because he was such a disciplined guy, and I just broke my own rule, and it happens to everybody. Everybody does it. Tom did it after 20 years, right? Right. And it just takes one slip and you can blow yourself up. So you just got to be on the lookout for that the whole time. So,
and when you took, I appreciate you sharing that a lot. This is the more important part of the story, though. After the loss, what did you do next? Take a break, go right back into trading? What did you do? Because everyone has experienced that to a different degree, all of us.
Yeah.
So what would be the proper way to handle it now with your experience if it was to happen again? Like Tom, in that story, Tom Canfield took a trip to Colorado, came back, still was not on point, took another trip to Colorado, and then came back and clawed it all back slowly. So that's why I'm curious, what is your resolution to it? You know what I mean?
So what I did, I dived into a lot of books, and I was kind of asking for some answer, and I took a course, and I think it was just my mind needing some time out, and maybe it should have been a physical trip somewhere, but I took a lot of walks. I used to walk the dog, and walk around the park and listen to the wind blowing and look for signs, and you pray, and, you know, you kind of do what you can to kind of look for an answer. And I think you eventually just work through it. The textbook answer would be scale down. You know, if you're taking a bet size of 2%, you take 1%, or you take 0.5% as your R, and just come back slowly. I mean, you will get your confidence back. It's training's a game about, you know, confidence, and sometimes you're reading the market like, you know, like sheet music, and other times you just feel nowhere. So it was one of those moments where I just wasn't in sync. So I would recommend, maybe a physical trip is the right way to do it. I know Tom Hogarth takes long walks on the beach, and you know, I think just kind of take some time out and meditate. A lot of people have different ways of doing it, whether it's physical meditation, listening to your breath. I go for a run, and just try and work through that.
Yeah. I love that. I live in Florida, so I do a little bit of everything. I'll go hit the gym, get the hard workout in. I'll do the long walk on the beach occasionally if my wife drags me out there. The problem with the long walk on the beach is, like, I have too much energy sometimes. I'm like, God, I just want to be back at the desk. But that's exactly when I know I need to be at the beach and not be at the desk. You know what I mean? That's exactly when you got to slow it down. And I love that analogy. You slip that in there real quick, reading it like sheet music. I played piano my whole life, so I can read sheet music pretty well. That's a really good analogy, because there are times where I feel like I'm just like, oh, I know exactly what's going to happen in the market. And then there's times like a couple of days ago when I think it was a couple of weeks ago, there was an FOMC meeting coming. I couldn't read SPY, couldn't find a trade on SPY for like 7 days. Not a single one. Just couldn't read it. And I think one thing that you do well, Richard, and you push this in some of the stuff we've said today, is like, know when the market is performing and be ready to perform. And then, like you just said, if you can't read it, if you can't see it, just stay away. Don't lose money. And I think you would probably say that's one of the keys that's kept you alive, right?
Yeah, I think there's a time for everything in life and in the markets, and particularly for a trend trader. There's times when the market's not trending, and there's times when the market's going sideways, and you enter something because one or two stocks are going up, but there's no breadth in the market, and you'll get chopped up like a liver. And there's other times where you can really make a fortune, and trading becomes easy, and you kind of flow with it like riding a wave, really. Yeah.
I love it. I love it. All right, everybody. This has been great. Richard, I appreciate you giving us the time. We're right on time here. James, thank you as well. Richard, for everybody that wants to connect with you, is Twitter the best place to do that?
Yeah, I mean, I don't really have a website or anything. So if you want to follow what I do, it's Richie T, RICHYTEE. That's my Twitter handle. And you'll find me there.
Beautiful. And we'll make sure that is linked down in the description below. So we'll have everybody follow you there and connect with you there. But Richard, it's been a pleasure. It's really good to connect with you. We really appreciate you coming on the show. James, thank you for making time even while you're traveling too. I know that this has been one of the guests you definitely wanted to be a part of, so I'm glad to have you here. And to all of our listeners, we appreciate you guys always, always, always. So thank you for the time. Make sure you're subscribed, and we'll see you guys in the next episode.